Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about divergences, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's Skool Community. Enjoy guys.
Hey, Coach, can you just show the divergences again or just reinforce for me?
All right, so you see what this is. This is a candlestick chart, and then on each side of the candle, they have this sort of heat map of the bids and asks.
Right.
And then at the bottom of each bid and ask a heat map, they show the total, and then they also show you the delta. So in other words, if it's green, that means there were more asks than bids, right? Or if it's red, that means there are more bids than asks. So when you see a candle that's near the top of a move, particularly if it's a green candle and then you see a red delta, that means that even though the candle had moved up, there was more pressure for it to go down than to go up,
Okay.
right? Because the red side was stronger than the green side. And it resulted in a delta between them of negative 29, even though the candle itself was moving up, the price was moving up. That's a divergence.
Got it. Thank you.
So here's another divergence that happened here before we got to the top on this candle right here. So it's an up candle with a relatively small wick, and the divergence is minus 39. Even though the candle went up, there's building pressure for it to go down. And here's another one. Look at this big green candle here. And this one was also a negative delta. So two in a row. And then it released, and then two more in a row. So 4 out of the last 6 candles here had negative deltas from here to there, right at the top. Right at the top of the that move. Does that make sense?
Yes.
So you're moving up, and then 4 out of the 6 candles that were going right into the top of the move had more pressure internally to go down than to go up.
So the more recent deltas are alternating right now as we're looking at it.
Over here?
Yeah, so what does that tell you?
It's just going sideways. So they're alternating. The divergence that I'm talking about is, okay, price is going up, but the overall pressure and bids and asks are showing that it's going down while price is going up. So price is going up, but internally they're turning around.
So in your past analysis, when you used to look at this, as you said, is it more reliable to jump, say, to an hour time frame rather than high noise level in the lower time frames to make a decision?
This is a 15-minute time frame. I'm looking at 6 candles, so I'm looking at over an hour and a half of information.
Okay.
I mean, you could look at it in different time frames, and it depends on what your trading objective is and whether or not that scale has relevance to your ideas. Maybe we could go to a 30-minute, and you don't see the divergence here as much. You see it a little bit here and then not here. So in 30-minute, you don't really see it except for right at the very top. That's not even a divergence. It's starting to go down. Now it's showing negative. Yeah, so in the 30-minute, I don't see anything. So it really comes down to interpretation, the time frame, and all this other stuff. So I don't know jumping between that is going to tell you anything or not, or whether or not me showing you that 4 out of 6 candles were showing a divergence and then that's significant. It's just too subjective for my liking. It's one of the reasons why I don't look at it anymore. And while some of you might look at this and think that there's some value in that, maybe, I still think that volume profile is far superior.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.